The thing is, what makes silver move from 5 to 50 in a matter of months is that those derivatives are no longer trusted. And people say this not academically. It's not. This is not how the thought process goes. They don't say, well, I don't think that my dollar derivatives are going to buy silver anymore, therefore I'm not going to use the silver. The first thing that they want is silver because that's the thing that is the most liquid in that environment. So that's really what I'm waiting for, the 15-to-1 ratio, when the public realizes that this isn't working anymore and I got to get something to hold my purchasing power. Otherwise, I'm going to lose everything.
Silver is increasingly pivotal in the global energy transition, particularly in producing solar panels and electric vehicles. Industrial demand for silver is forecasted to rise by 9% in 2024, continuing to fuel the market. This surge in demand, particularly for photovoltaic panels, has contributed to silver prices surpassing $32 per ounce for the first time in a decade. Although silver saw a sharp decline of nearly $3 last week, the price held strong above $30, signaling confidence among buyers in maintaining this level. This resilience suggests that another push toward $33 is likely on the horizon, driven by ongoing global economic and geopolitical uncertainties that continue to bolster demand for safe haven assets. Financial journalist Rafi Farber discusses how central banks are on an unsustainable path, leading to an inevitable surge in silver prices that can no longer be overlooked. Farber emphasizes that these dramatic price movements are not driven by increased industrial demand for silver, but by a sudden loss of confidence in the dollar. He highlights that significant price shifts in silver, like the rise from $5 to $50, tend to happen when trust in dollar-based derivatives weakens. As gold prices soar, Farber explains, the general public unable to afford gold will increasingly turn to silver as a more accessible store of value. According to multiple sources, including a recent Interfax report cited by Bloomberg, Russia's draft federal budget outlines a plan to make silver a key part of its state fund's expanding portfolio of precious metals. This move marks a significant shift from Russia's previous strategies, where silver was largely overshadowed by gold in central bank holdings. The inclusion of silver suggests that Russia is now exploring new ways to diversify its reserves, particularly in response to the economic sanctions imposed by Western nations. Rafi Farber argues that the widespread misconception that money is merely a spontaneous agreement among people needs to be corrected. Instead, he views money as a natural evolution based on the liquidity of certain commodities, such as silver, which has historically been trusted as a store of value. According to Farber, as confidence in fiat currencies diminishes, silver's importance as a safe haven asset becomes even more critical, reinforcing its role as a reliable store of wealth during times of economic instability. Stick around for the full video, and if you find it helpful, like and subscribe. We're excited to see more of you joining our community, with only 20% subscribed so far. Help us hit that 1,000 milestone.
I don't deny that silver is an industrial commodity, but what I am following and the reason why silver goes from, let's say, what was it, $6 in 1978 to $50 in 1980, right? It's
Right.
not suddenly that industrial demand for silver just picked up, right?
Yeah, that's true.
That had nothing, that had almost nothing to do with it. It had something to do with it, maybe like 2-3%. And the reason that silver goes from what was it, 10 bucks in 2008 to or was it even less, to $50 in 2011. Also, not industrial demand, not at all.
Right.
It's what it is that it's hard for people to even understand it because nobody goes around with silver coins anymore and trades them for stuff because we use dollars.
Right.
But what causes silver to do that is a sudden lack of confidence that dollars work anymore. And what do I mean by that? Well, the reason that a dollar works, it's not, and this is one of the main things that I try to dispel on my channel on the Endgame Investor. The channel is actually Rafi Farber. I didn't have the name when I started the channel, or I just wasn't thinking. Whatever. My channel is Rafi Farber, my name. So one of the biggest myths that I try to dispel is that money is not like a spontaneous agreement between people to use XYZ as a money, and they sign a contract or they're in a big stadium and they say, oh, we're going to use this and it's going to be money and then we're going to be able to trade. It never happened. There's no such thing as spontaneous agreement or mass agreement between people.
Right.
Only two people can agree on something at one time, right? It just happens to be that that more people agree around to what the exchange value for a money is because the commodity happens to be more liquid than other commodities, right?
Mm-hmm.
When if you and I make a trade based on silver, like I give you silver coins, you give me that chair, other people will agree to around that price to the exchange value, something liquid in
Right.
that area, right? So that's why people use silver as money. The reason that we don't use it directly is because something came in the middle of it, and that's called a dollar. And then banks took the silver, gave us the dollars, and we ended up trading the derivatives of it. But the thing is, what makes silver move from 5 to 50 in a matter of months is that those derivatives are no longer trusted. That when the derivative dies, the public will not go to gold, right?
Right.
Before silver goes to the moonshot or whatever it's going to be, let's say whatever the dollar amount is, it's going to be a 15-to-1 ratio. Before that happens, you
Mm-hmm.
start seeing the banks worry. And the banks don't stack silver. They don't have the room for it. There's no reason for them to do it. They stack gold. Banks stack gold.
Right.
Right. So you'll see gold move higher and higher and higher, and then silver will be dragged along with it reluctantly. And then all of a sudden, the public wakes up, and the public, they're not banks, right? And they can't afford gold because by then gold is too expensive. So they say, you know what? I can't deal with these dollars anymore. They're dying, and I keep and they're not maintaining their purchasing power. I got to get something that maintains purchasing power. So they buy anything.
Wow.
But the first thing that they want is silver because that's the thing that is the most liquid in that environment. So that's really what I'm waiting for, the 15-to-1 ratio, when the public realizes that this isn't working anymore and I got to get something to hold my purchasing power. Otherwise, I'm going to lose everything.
In 2022, Mexico solidified its position as the world's largest silver producer, yielding about 6,300 metric tons, far exceeding China's output of 3,600 metric tons, as the United States Geological Survey, USGS, reported. The surge in silver prices, which jumped nearly 35% in 2023, has been largely attributed to heightened demand from the solar energy and electronics sectors. This positive momentum has continued into 2024, indicating a strong market for silver. A significant factor driving this price increase is the dovish policy stance taken by major central banks, including the Federal Reserve, the European Central Bank, and China's central bank. Their implementation of fiscal and monetary easing measures, coupled with ongoing economic uncertainty and rising geopolitical tensions, has intensified investor interest in safe haven assets like silver and gold. Farber points out that while silver was historically used as money, the introduction of the dollar and banking systems replaced direct silver transactions with dollar derivatives. Now let's redirect our attention to a video.
Briefly, in 2020, right, there was these lockdowns, and our genius politicians decided to save the world with their bravery and amazingness, and we thank them so much for their wisdom. Stop the economy, and people were freaking out, and people ran to gold and to silver.
Right.
And
You couldn't order it
I
either.
what?
You couldn't order
Yeah,
it too, I remember, for a while.
you couldn't, but what you could do is you could lock in a price, and then a month or two later, it would be delivered. Because
Oh.
we knew that these genius lockdowns, they would solve everything very quickly, and then everything would go back to normal. Which it took a few years, but it happened. But when we're talking about Iran bombing the oil ports of its neighbors and its other Arab countries, then we're talking about something different, and a Franz Ferdinand moment where we're going into several years of world war, which I don't think the dollar can withstand. So you could enter a world where the dollar is just not going to work, and you're going to have to trade silver coins or gold coins for what you need. And again, I'm not saying this is necessarily going to happen in the next few weeks. I'm saying
Right.
in the world that we are in, it's plausible enough that you want your stacks with you in case this happens, because you won't be able to get them. They'll try, but
Right.
it's not going to do anything, because what's a new digital dollar going to be based on? It's going to be based on the old
debt.
dollar,
Yeah.
because you have to
Yeah.
base the new price array on the previous price array. It's like for example, when you have a hyperinflating currency and they lop off 6 zeros, or whatever third world country it is, and they say, oh, this is the new Zimbabwe dollar. Well, it just hyperinflates again because it's qualitatively, economically speaking, the same thing.
Right.
So a digital dollar, a CBDC dollar, would be the same thing as today's digital dollar. It would just be more trackable. So why would people accept that?
Yeah. Yeah, you're right.
The question is, will they try? Yeah, they'll try. Will it stabilize anything? No,
No.
because when you have a collapsing tower, building another floor on top of it is not going to stabilize it.
Silver has traditionally been viewed both as an industrial metal and a store of value similar to gold. A large portion of global silver production is utilized in high-tech sectors, especially electronics and renewable energy, which are vital for solar panels. As demand for green energy rises, silver's industrial consumption is expected to increase. While central banks have recently favored gold, a shift towards silver could prompt a re-evaluation of its role in the global financial landscape. Additionally, amid escalating geopolitical tensions, particularly with Russia, silver may gain significance as a strategic asset in economic competition, potentially broadening its use beyond mere industrial applications to a tool for financial maneuvering. Historically, gold has been the go-to safe haven asset during times of crisis. With silver being more affordable, do you think the public will turn to silver if gold becomes too expensive? Join the conversation. Share your thoughts in the comments. Give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.